This is going to be a long-term analysis of gold, and we're going to do that by looking at gold futures, going all the way back to the mid-1970s, 1978, the year I graduated from high school. Damn, that was a long time ago. So we're going to look at this from the perspective of price action and volume profile. On the right-hand side, we have the volume profile of the gold chart. This is a monthly gold chart, so each bar constitutes 1 month of gold price action. There is a indicator on here. What is that indicator? It's a linear regression slope. Basically a kind of tool that you would use for trend following, when is a trend starting, etc. And if I were looking at this, I would say that perhaps a trend is starting to start up now. As you can see, it's turning up over the last year or so. Now, there are two notable things in this chart. And, well, actually, I'd say that there are four notable things. One is back in 1980, we had a gold bubble. And then, secondly, in 2011, we had another gold bubble. Now, they're very different in size and magnitude, but if you look at it from a long-term perspective, back in 1980, that probably seemed like a damn big gold bubble in the same way 2011 did. And the interesting thing here is the shape and the amount of volume or activity that happened at certain prices. So if we were to go back and look at the anatomy of a bubble, both of these bubbles exhibit very, very clear patterns. We have that initial blow off top and then pullback, a sharp pullback, followed by a secondary blow off top and then capitulation. And then a secondary rise followed by some diminishing, I guess you could call them dead cat bounces, until we found some happy medium. Now, here we're coming up into this other bubble, 2011. We have the initial blow off top. Now, granted, this is, in terms of magnitude, much bigger, but it's still pretty much the same exact anatomy, same pattern. We come up, blow off top, come back down, secondary blow off top, come back down into a series of dead cat bounces, and now we have this new kind of move up. And I equate this move up right here with this little spike here in late 1982, 1983. Looks pretty much the same. It's just a different scale. The other thing that we notice here is the volume profile, the amount of volume and where that ended up. That ended up right here along this, where we sort of settled in, where gold price tended to normalize. And we see the same thing here as well. All the volume seems to be centered around here. Now, some could make an argument that, well, we're setting up for something further down the road. We're accumulating and waiting for that next push off into the moon. We're going to moon. Gold is going to moon. Or it's going to do exactly what it did back here in 1983 after this little push up here, and retract probably back down to the top side, at least to the top side of this volume node here. Volume profile is showing you the volume at specific prices, the amount of actual contracts that were traded at that price. And this is a real good indication of supply and demand and where the market finds value and where it doesn't find value. Obviously, where we see big volume nodes, that's where the market found value. Where we don't see big volume nodes, that's where the market apparently didn't find much value or wanted to zip through those areas. And we can see there really wasn't a whole lot of value between the prices of 500 and 1,000. As you know, as we entered into that area, we moved pretty quick. And it was pretty much the same thing back here from 1976 to 1980. There was hardly any volume. It doesn't even register. So after this spike in 83, we came back down and just measured here and just kept on building the volume. I expect to see the exact same thing here, that will come back down and move sideways a bit. Now, do we have some systemic risks, some things that could be happening in the future of our economy with the Fed, inflation, that could affect this price and send us up to another cycle, another bubble, much sooner than this frequency here would indicate? I mean, the last bubble here, 1980, and then all the way until 2011, until we had the next peak of a bubble. 31 years. It's a long time. Will it be 31 years between 2011 to the next one? Are we looking at 2042? Or is all of this getting compressed? And will we see a bubble much sooner? Maybe, I don't know, 2024. Maybe after the next election. I mean, maybe that's what we're looking at. So, assuming that Trump gets reelected and then he is out of office, and then whoever comes in after that, will we have a change of guard? I don't know. And will that have some effect on the market? Will the Fed still exist? What will Trump do with the Fed in the next 4 years? All of these unknowns, we really don't know. But it is still very interesting, this similarity in pattern. So based on that, I think that we're going to come back down to this big volume node and move sideways for a bit, accumulate, and then move up to the next bubble. And commodities like this seem to behave like this, bubble after bubble after bubble. Now, things are getting pretty tricky here in our economy. Are we getting to a point where we are no longer elastic? I don't know. Let's move in on this, say, to a daily. Well, we'll go to a weekly first. All right, so here's the bubble. Here's this big sweeping move. Now it looks a little bit more protracted. And then this new break above this channel that we were in for quite some time, which was bound by, let's see, 1,000, 1,100 at the, let's see, 1,100 to about 1,400. So we've been in this channel for a long, long time. We finally broke out. If we go down a little bit further and we take a look at that that pattern, here we can see the breakout that happened in 2019. Huge, huge move. And now we have this big sweeping move, kind of like a cup and maybe a little handle here. Are we ready to continue? Cup and handles are generally a continuation pattern. Is that what we're seeing here? Or is this just a false breakout? And are we going to move back down to, oh, I don't know, it looks like maybe as low as 1,360, 1,400. I can see us getting down to 1,415, 1,450. Maybe to the bottom here. It looks like there would be good support. So to me, that's what looks like what's happening with gold. I think we have this false breakout from a long time or a long consolidation, and then we're setting up for something in the future where we're going to climb that wall, that bubble wall, and maybe then that's the breakout. But to me, it just doesn't look like this. This looks like what we saw back way back here. That looks more like that. That, just a smaller version, looks like that. All right, well, whatever that's worth, that's my long-term gold analysis. See you next video.